Hey everyone, welcome to another episode. This is JR, founder and CEO of Social Market.
Hey, my name's Leon Hitchens, and I'm the Chief Marketing Officer here at Social Market. Get it
Gang,
right one of
software,
these weeks.
right? Well, I don't know if there's a C-suite position for software chief officer or something, but that'd be kind of interesting. Well, anyways, this
CTO,
is Social Ledger Report. Yo, CTO? I mean, that's probably the best way to put
more
it,
or less, yeah.
right? Yeah, so this is Social Ledger Report where we talk about crypto stuff. Leon, you told me about Tether. It was almost becoming insolvent, right? Do you want to talk about that? Because
Yeah, so there
I
was
don't know
this
the full story.
Yeah, so there's this interesting post out here. So S&P, which is like you know it as S&P 500, but they're like a credit rating agency too,
What does it
and they
stand
do a
for, by
bunch
the
of
way?
stuff.
The S&P,
Oh, dude, I don't know.
the poor something.
Let's go look it up.
People are like,
S&P
these guys are fucking amateurs. They
Global.
don't know what that means.
Dude, I don't actually know what they stand for.
The the P stands for poor, but I don't know what the S stands for. And I know it's the parent company of the S&P 500 that everyone loves to refer to as far as being a pro investor.
Standard and Poor's.
Okay, standard. That's what it fucking is.
Yeah, Standard and
Okay.
Poor's. So they do like
Yep.
bunch of market indices, and then they do credit rating.
Right.
So really big organization. Essentially, like America's even had like downgraded credit ratings in the past.
Okay.
It's pretty serious thing because like also, it's just like a normal credit rating. The lower you are, the more risk that you are to anybody buying, the more risk to like institutions that are investing or lending out to you. Like this is the interesting part, and the math is what this guy's making a claim here. It's like $184 billion backbone of crypto markets has crashed away from insolvency, and like essentially what he's saying is Bitcoin holdings are the risk, which is like a 5.6% of reserves, and then there's a safety buffer of 3.9%. There's like essentially the risk here is a decline in Bitcoin's value could lead to USDT being under collateralized. So it's all around Bitcoin speculation. Like if Bitcoin slipped further during that drop, so we went all the way down to I believe as low as 82,000 on Bitcoin, that could cause the USDTC to have a problem of they're not collateralized with enough money, and then also there's a bunch of risk that like they wouldn't be able to even go get loans or anything to kind of pull them together. They've also had like a bunch of issues in the past with like the attorney general, was backed by 27.6% of days examined during a 26-month period. The CFTC has fined them in the
Wow.
the past. They're not reforming. They're not doing this. Like I saw a bunch of the All In podcast folks talking about how they should hold bonds and treasuries, which I think makes a lot of sense. Like if they're
USDC does that.
stable. Yes,
I don't know if you know that.
USDC does that. Yes, like that's why a lot of people are just saying that Tether is kind of like a risk because it's non-American, essentially.
Okay, so that makes sense. Shit. So essentially, TLDR, in crayon eating terms, USDT could essentially become insolvent if there's no collateral to anything.
Yeah, and I know that they're like, so this is the weird part of their history is, I believe they're American based, but they're based in El Salvador now.
Okay.
I don't really, again, like, why are they out in El Salvador? What is it? They're a very old company too. They're like 11 years old. So there's a
That's
lot of
ancient for
questions
crypto.
here. Oh yeah, like I think 2014 is when they came out.
Yeah, so that's ancient. Well,
Yeah,
Coinbase
let's
came out
look.
in 2012, so it's around that time.
Yeah, let's like look to see what else people are talking about too. Like
Yeah, yeah.
central banks. Like I've seen this too. Tether's purchased 26 tons of gold in Q3 2025. Surpassing all central bank buying. Like that's massive.
bought more gold. So they're not. We got off the gold standard for a reason because people needed more money, and the government decided to fuck everyone up by saying, let's just print more of it and let's just not have it, you know, nothing to collateralize it. Which it's good to have a standard, which is gold. It works because inflation isn't as high as it is now, but why don't they just do well bonds? It kind of puts everyone in the same place. I mean, inflation is just going to be followed by the US dollar inflation because the US dollar inflation is just thin air money essentially. But I mean, it's still kind of a big deal because nothing is collateralizing USDT, which is essentially similar to the dollar, I guess. Is that kind of like the situation
yes,
issue
but the dollar is backed by the full force of $800 billion of the U.S. military.
Okay, yeah.
What is Tether
right.
backed by other than some dude in El Salvador like saying this is all okay, and maybe some crypto chain? Like the difference is the United States government came off of it in 91 or 92 is when Nixon took them off. Or sorry, not 90, but 71 or 72.
Yeah, the gold standard. Mm-hmm.
Yeah, like
it was Nixon.
There's a lot of questions here that I have, and I see like people debating it, out there like
the economic ninja. That guy is kind of big on X. The U.S. government's secret plan to dominate the world's market. The crypto company Tether to buy up all gold without rattling.
Sort of a big deal. Tether, the USDT stablecoin, that company now owns more gold than Hungary and South Korea. It's absolutely staggering the rate that they're buying it at. Check this out. Tether just added 26 tons of gold in the third quarter alone, outpacing any central bank in the world. Its reserves now include 7% gold worth over $12.9 billion. I don't think people can appreciate the fact.
That's a huge deal. Do you know about the guy in the 70s who bought up all the silver and was able to play the silver markets?
I read something about that, funny enough. I'm usually on TikTok learning this cool shit. That's my feed if you look at it. But essentially, correct me if I'm wrong, but this guy had so much silver that he could essentially, I mean, he was a whale, and he could affect the value of silver because how much he had.
Yes. Like it was so much. I think he held like 80% of all stuff, but this is an interesting, Tether buying gold is one good for them.
The stability you need, something to be collateralized.
Yeah, because you need a liquidity push out there,
right.
So if they don't have something backing it, what's the trust in the system? Like the trust in the system for the world is this military will control it. That's why you have like Argentinian. Dollars crashing and stuff. So that often the public just doesn't have faith in their government. That's when the currencies fall apart.
So I did a Google search while you were talking, and I asked, what is the most used stablecoin? Tether is number one by a market cap of almost 185 billion. Fiat currency and other assets, that's the primary backing. And just the key feature of why everyone is using it is because it has the highest trading volume, and it's mostly it's mostly used globally. So it's widely available. And fiat currency and other assets, which we've already saw like gold, but I mean, why is it going insolvency again? Is it like just because
it's because of their Bitcoin price? So if their Bitcoin price slips, that amount is what they need to have a buffer of like 3.9%. Their Bitcoin reserve is like 5.6%. And if that slips, they could go insolvent very quickly. So Jason, I thought, had a really good take again. Sell 100% of Bitcoin, own 100% of treasuries, get one, not two, but two audits done by American firms. I think these two are very valid. I do think as a treasury for something out there, Bitcoin is a little too unstable. They need to buy something that right now in the foreseeable future. Like I don't see Bitcoin being stable at all, like in the next 10 years.
if I were
it's gonna keep increasing in value at
Right.
at rates and then dropping in values at rates that most assets cannot not tackle. Like that's why you take U.S. Treasuries. Their values their value more or less.
No, so okay, everything makes sense, and Bitcoin is, I think, good long term. But I mean, here's my question: like, why don't companies just, instead of using Bitcoin, well, obviously not only Bitcoin, right? Like we're seeing now why they should only rely on Bitcoin, right? But like, why don't people just hold, or companies hold Bitcoin right now and then use it as collateral in the future when it's worth more than their original purchasing price? Because, we had a market crash in.
I think you
Go
can
ahead.
do that, and the reason I'm jumping in is I think you can do that, and any publicly traded company can do that. If they can buy Bitcoin with like free flowing cash, like look, MicroStrategy's had this like weird crisis last week too when the price was dropping, where people were talking about moving them from indexes to something else. But strategy, whatever they're calling themselves, they're still a
Yeah.
$500 million a year business with a treasury that's Bitcoin. Tether is a currency that needs to be backed by something. It's not a
Yeah.
business that's free flowing cash. Like
That makes sense.
if Tesla, tomorrow bought another $20 million worth of crypto and they said we bought it with our profits, it's like, oh, okay, cool. There's no risk.
Okay.
Like, there's no risk that Tesla's going to go insolvent because they're using that as just a bank account. It's like, no. But Tether is literally trying to say we're a stable coin with something that is not tied to the US dollar. Like, I 100% believe they need to be in more treasuries. Like, they should be buying
Yeah.
T-bills, at least T-bills for the short term, and then you can buy treasury bonds for the long term. You can buy I forget what the medium term is, or the I think they're notes. It goes T-bills, T-notes, and then T-bonds. So T-bills, T-notes, T-bonds. That's what treasuries are. And like
So gold, they spend again a shit ton of money on gold. Is that just not going to help them at all? Is it only supposed to be T-bills and that's it? Because like
that's a good
USDC,
question.
half of its treasury, I believe, it's half of it is T-bills. We can look it up here on Google, right? But like,
Can we ask Grok?
yeah, I would ask it like, what is it? How much does USDC have in? Well, okay, so the provider of USDC is Circle, so you could
Yeah,
probably get a
alright.
better result if you specify that.
I'm gonna ask. I want to see the general
That's
thing.
fine,
What
yeah.
happens?
Yep.
So issued by Circle. I wanted to see if it was smart enough to know that too.
Okay, so that's a good point. Everyone is hyping up LLMs. This is a little side note, but I think LLMs are just more hyped up than they should be. It's just mimicking knowledge, but at the same time, it hallucinates so much.
Dude, what the fuck? See, this is my problem with Grok. Shit like this.
Like
Like I get this a lot.
Really?
It just bothers me sometimes. Like I don't get timed out on like Claude or even Perplexity or ChatGPT, but constantly with X and Grok, I run into so many issues and problems.
You know what? I've seen the difference as well. I have Grok on my Tesla, and when I just want to talk about it for whatever shit that goes in my head, it just fucks up halfway. It slows down. It just doesn't think. It's supposed to be one of the smartest LLMs too. So, go figure.
Like I
But
think
yeah,
the problem that I have with Tether too is like they're not very transparent on all of their parts. Like they have it, but it's not there. So like in circulation,
We can't
is,
see it openly like Circle here.
Yeah, like
73
73.8 billion in USDC, and then the reserves is more than what they have.
Nice.
Let's see.
Wow. Okay, so here's the thing, like, and this is before Genius Act, right? So the thing with the Genius bill is it makes these USD or stablecoin issuers a framework for them to stay compliant, which was non-existent with the last administration and with Gary Gensler. He would just sue people, sue companies, give them no reason. So this is obviously a better step in the right direction. At what point does USDT need to comply with that? Obviously, they're not in the US, so that probably is the major reason. But at this rate, they're going to fuck up, make themselves go insolvent if they're not going to establish, I think largely put, USA is ahead on the crypto market just because of this framework of regulation that I don't think the Genius type of act or even the Clarity Act exists anywhere else in the world. So the US is saying, hey, dude, we have this open market. It's very big. We invite you to create a crypto company with us. Here's a guideline of rules for you to follow. And you already have the established presence. So what's all this?
So they have total reserve is $118 billion.
Okay.
Okay, but they have
So that's-
180. They have 184 billion in circulation. So they
Okay, so
have
that's bad.
a roughly $60 billion part. The problem with this, and this is not uncommon too, even for like banks to not keep all of their money on hand. Banks, I believe, need to have 20% of all deposits on hand for stuff, because like essentially what happened during the Great Depression was there was a run on banks and gold was the reserve, and then they just didn't have enough cash on hand to give it to everybody. So if there's a crypto nightmare, and let's say Bitcoin drops to $50,000 tomorrow, and there's a run on USDT, they might not have enough money to fulfill their, the total amount of their
Liquidation.
like the liquidity of it. Like they would run into liquidity and have an insolvency crisis. So there's definitely a very big like part here that is what if. But this is what happened in 2008. This is like again over and over is like what if the worst thing happens? It's no different than that recent bank, the Silicon Valley Bank. What was it called?
SVB.
Yeah.
Silicon Valley Bank.
So there was essentially the same thing run on the bank. The bank fell apart. Like the USDT could have the same thing happen to them. Is if a run happens and crypto has a bad week, they could go insolvent very quickly. That's why
Wow.
I've never wanted to use USDT for anything. I have been very adamantly against them from the start. Stable coins also kind of broke my brain until Circle really was like kind of moving. It makes more sense to me now, but still at the same time I'm kind of like this like the right thing? Like,
No, it makes sense. I'll be honest. USDC, I trusted more, not just because, well, even more after what we discussed today, but also I know Coinbase largely pushes for USDC, and I actually trust Coinbase as a crypto company more than I do a lot of other companies, even more than Binance, if I'm being honest. And I've used both, right?
Yeah.
I do have some USDT, but honestly, I do not feel comfortable owning USDT after today. So I'm probably just gonna switch it.
I totally would. I'd recommend getting out of it. Like my investing strategy recently has been USDC in a high yield checking account, acting as my high yield savings account. USDC is my like high yield savings account. I have it on Coinbase, or maybe actually I have it mostly on Base, and then I have some money that's out. Loaned out via Coinbase's USDC loan program thing. So you're getting like 8% back. And then my other strategy is buy more Bitcoin, always. That's kind of like 40% of all of my holdings is always going to be Bitcoin. Ethereum's another hot one I really like. I've really jumped on the Solana train recently, especially with Phantom Wallets. Hyper liquid staking, where you get P-Sol instead of regular Sol. You trade it for that. I really like that, especially the rate that you get, which is like 6 or 7%. So
it's almost
so I've really pushed into Bitcoin, Ethereum, Solana as the core ones, and then USDC is like hold my US dollar somewhere that I believe is better. But tied to all of that, and I think also kind of like a unvarnished ad for us, is we could talk about that
Yes.
Upbit hack real quick.
The bit hack, which one is it again?
The Upbit. It's an
Okay.
exchange.
Did this
Apparently-
happen this week? I swear, I feel like a little bit out of it.
So the TLDR is almost $30 million in Solana assets have been stolen from Upbit. They're the South Koreans' largest crypto exchange. And again, this is the part, and this is the
Shit.
part that I think is happening fast in crypto, is consolidation and single people holding crypto is a really big risk. I think Coinbase tries to
Yes.
mitigate it. I think Kraken tries to mitigate it. All of them try to mitigate it by having reserves and all of this, but it's really hard, to protect everything and keep this there.
Here's the other thing. Upbit is what, a central exchange?
Yes, they're a central exchange. They're the largest in South Korea.
Okay, so I'm gonna rant for a brief moment, so warning. But we've talked to customers, Leon. We're like, hey, dude, we have a self-custody wallet. It's called Social Market, which the name is gonna get rebranded next year, so keep an eye out for that. Social Market is a self-custody wallet that has automated security, and we're adding automated trading and auto balancing. We're using an agent system, which IP, so we can't really get into that. So that's the context. And we've interviewed some customers, and these people are either smooth brained or they just don't give a shit about their security, because they're like, well, I have a lot of money on the central exchange like Coinbase. Why should I even care about this? This is why. And you know what? If Coinbase or Upbit, in this case Upbit, lost all their money, how are they going to get that money? How can they pay back all these customers?
Yeah,
And
the bright side to this one is that they have enough in the reserves to cover that. So at the moment,
Wow.
I'm sure
Great.
they have insurance and stuff for it.
Yeah, they should.
Because I think that essentially they're there. But this isn't the first time I believe that they've been embroiled in problems. I know there was three. Like leaders of the exchange back in like 2018 that were charged with like some sort of fraud and making fake orders, and then also I believe there was some sort of hack or something around that time where they had some money lost. It was the Ethereum hack in 2019. I just looked it up. They lost
There was a hack,
48.5 million of Ethereum. So they are like targeted consistently, and honestly, I don't know why anybody keeps their money here.
So here's the thing. When I was just finish my thought real quick, and I'll let
Yeah.
you finish yours. But I've heard this argument saying like, dude, if Coinbase falls, the crypto market as we know it should cease to exist. And I think that's a very large oversimplification and kind of a naive thought, because crypto is so decentralized and it's becoming more centralized as we speak, which is kind of bad. But crypto is so big at this point, it's not going to fail overnight. And I also don't think Coinbase would fail overnight as easily. But I mean, anything could happen, right? Like look at SVB. But
I think that's the same argument that led us into 2008. I don't disagree with you, but
yeah,
like if you look at the market after FTX, like let's look FTX failure.
it fell in 2022,
on
and it
the
actually
market.
crashed Bitcoin to 40,000.
Yeah, like this is like again, these are what's going to happen. Like
Yes.
so essentially you talked about it, but the big part is it will recover, but it's going to take it took 2-3 years almost to recover. It actually really took an act of the president coming in to recover crypto from the Biden administration and all the problems that he was doing. Like
Yep.
JP Morgan was unbanking people. There's just so many issues with it.
Yep.
I do agree with you that it's just not going to fail. I think the too big to fail conversation's part of the problem is just like
Yes.
the NVIDIA and the AI stuff. That stuff's not too big to fail. It's going to fail. And the reason it's too big to fail is because the federal government's going to have to step in, because that's going to plunge us into depression. Just like
Yes.
if 2008 didn't happen, or 2008 was just let happen, we would have been in a Great Depression. Like, we would have been in some sort of depression. Because now the U.S. government has the ability, because they can just print money to turn around and do it. But I do believe, like, on the long term, you know, it's going to be good. Like, for crypto, and to your point, like, it's so decentralized, but also we are getting very centralized. Like, more and more of these ones, like Binance is a problem. Binance with ICOs, like there was a study on Monad holding its value so well and actually increasing, and comparing that to ICOs that have launched on Binance. When Binance, they take like 12% of all coins. When Binance launches with an ICO, often they're able to control the price, and it dumps, and then inevitably that ICO doesn't do that well. But if you're not on it, and Monad showed it, if you're not on Binance and they didn't launch on it, and they're still not on Binance, I believe, they had pretty strong price increase and pretty strong staying power. So it just kind of shows that, you know, CZ and whatever he's doing out there with Binance is a problem. He's playing the crypto markets and there. So central exchanges are a problem.
For anyone who thinks, if you're watching this and you're like, oh, I have all my money on Coinbase or on Gemini or any central exchange, just be careful. Okay, you can do whatever you want with your money, but why risk it? If you don't want to use social market, that's fine. At least use a self-custody wallet like MetaMask or Phantom Wallet. You will take yourself later. Don't be lazy. You know, a lot of people compromise on their security because they're lazy. So do your own research. If you don't want to just take our word, you know, I encourage you to do your own research.
This episode, and we'll put it in the show notes, is about how the self-custody wallets are having their neobank moment. This guy,
like a big thing right now.
He was an early crypto. I forget the name of his company initially, but he was an early Ethereum wallet when Ethereum first launched. Now it's ready.co, but he talks about all of the stuff coming on network. It's coming via debit cards. Like, for example, if you deposit $20,000 in a bank account, you're getting a call. They're going to call you. The IRS is going to look into it. The bank's going to fill out paperwork on you. You deposit $20,000 into a self-custody wallet, nobody's the fucking wiser. Now, people watch the blockchains and, you know, we'll look at DEX scanners and stuff and see there, try to attempt to know whose the wallet is. But you deposit $1 billion into a MetaMask wallet and you're just using a debit card, there's no government oversight, more or less. Like, you know, there's some degree of information out there, but you're pretty anonymous. Like, I think that's a big thing, and this podcast really talks about it, how cards are becoming the essentially self-custody wallets are going to become the new neobanks. So instead of using Cash App, you're going to be using Crack, terrible name. You're going to be using Social Market. You're going to be using MetaMask. You're going to be using Phantom Wallet. And you're going to have your money there, and then you're going to cash out to a stable coin, and then you're going to swipe your debit card. Like, that's their belief, and they think that everything's going to be so decentralized that, you know, nobody will be able to come in and reach into your account and say, hey, we're going to debank you. They're going to go, oh, hey, like maybe they turn off your debit card access, but I think this is the push, and the part about, you know, this hack is, and I'll talk about it in a minute, but I think it really just shows that central exchanges are there for on and off ramping. They're there for a reason. You should keep some of your money there. You know, if you're doing high frequency trades or something, like, you know, I can understand it, but
we should do a crash course. Maybe next episode, Leon, we should do a crash course that's like, hey, if you're new on crypto, this is the strategy. This is like the
let's do a webinar.
Yeah, even a webinar. Because, like, I have this, you know, Ridge cold wallet. I hardly touch it, and it's just there. And I have most of my crypto yield farming right now. Yeah, I'm just yield farming. What's that?
I'm going to look it up. I've never heard of it.
The Ledger cold wallet.
Oh, okay. Yeah. Okay.
Yeah, this is the Bitcoin edition. It came out last year. It's no longer available. So
Oh, very
I
nice.
lucked out
Very, very exclusive. Okay, so real quick on this hack too. I think
Yeah, go
the
ahead.
interesting part is there's some concern that the hackers actually surmised or figured out all the secret keys to the wallets.
Okay.
So there's a lot happening on there right now, and the biggest and most important part is it looks like it's a North Korean hacking group called Lazarus.
Oh, those fuckers have been everywhere, dude. Those guys are just causing a lot of damage for years. You know?
Oh yeah,
I don't know if you know
especially
about that.
especially just out there. But they are supposedly able to figure out the cold wallets or the self custody wallet secret recovery keys by using some software and guessing based
Wait,
on
they're
that.
able to crack the private key from your self-custody wallet.
Yeah,
Is
hold
that what
on,
you
let
just
me
said?
find it. Yep. Good.
If that's true, that's kind of big. That could jeopardize everything, even our product. So,
Yes, right here. The Upbit says hackers may have inferred private keys from wallet patterns.
a level Ki Young Ju. Who the fuck is that? Oh, my bad. Ki Young Ju is the guy who posted this. Says only lessers could likely achieve. Upbit says attackers might have inferred private keys by analyzing users' wallet address patterns. If true, I doubt anyone other than North Korea hackers could do this. Dang, that is scary. But here's the thing. Our product offers a type of coverage. So if some shit like this were to happen to your money, you may want to check us out because it's a shameless plug, by the way, but crypto wallets don't have like any, whether you're
I love this one. Sorry.
a bit. No, you're fine. What does it say?
Hack level Lazarus, Upbit hack level Lazarus, my security level, password 123 and a sticky note under the keyboard.
Dude, people, I'm sorry, dude. Like, I hate to call people, I hate to shit talk people, but some people are just fucking stupid. Password 123 exclamation mark is the most common, or not even the exclamation mark, but like password 123 is the most common password, and people need to start using password managers.
Yeah, like this is something interesting too. And sorry to keep
No,
derailing
don't
your
worry.
thought, but
Don't
like
worry.
this is something that I keep hearing a discussion about. Blockchain transparency is good, but it's showing that like pattern analysis can reveal more than expected. This is also discussion about companies buying Bitcoin at really high levels and people figuring out the wallet and figuring out the company behind it, and then that
Right.
puts that company at risk for hacks and everything. So there is some parts to this like that being transparent fucking sucks sometimes because people
Yes.
are just assholes. So it's out there, but also look, imagine losing funds because your wallet pattern looked predictable. Like what the fuck,
That sucks. I mean, here's what I'll say, just my quick thought. If we look at anything that is in the crypto market that lets you hold your money, it doesn't come nowhere near close as far as almost reliably storing it as a bank. Banks, they have FDIC insurance, which is backed by the government, but just in the event of a bank run, which is like the worst fear, right? There's nothing similar in crypto. We're actually solving something like that with social market, which, shameless plug, but like, it's just a fact. Like, we see this as a big issue. No one is offering any type of coverage except for Coinbase on their central exchange, but you still got to pay for it. And I mean, that's normal, right? But like, FDIC insurance is like kind of big. And I mean, we're not insurance, but this is more like a warranty with our security. But you cannot get that kind of security anywhere else. And I can say that confidently because of the way our wallet works. But it breaks a little, right? Like right now, we're having some authentication issues, just to be very transparent and clear. But we're working on it. But, if you want to try it out, dude, go to socialmarket.tech. If you're listening and made it this far, like go to socialmarket.tech, let us know what you think. But anyways, I think this issue can get solved.
This is an
What's that?
interesting take. Right here is the central exchanges are not banks; they're honeypots for the world's most sophisticated predators, which is very true. Like I'm
Yes.
sure there is many people looking at Coinbase and their security has to be above all, like the best. Like there's a lot out there.
I mean, I'm sure. Well, so Coinbase in the early days, they were hacked at one point, and people were able to withdraw money from I'm guessing their reserves because they're an exchange, so they need to have like a reserve so that way customers can buy that from them. People withdrew like a couple thousand. This one hacker and Brian Armstrong said they would have become insolvent if they hadn't tackled that. If they let that happen. So that's scary. And a lot of people put trust on central exchanges. Coinbase is great, don't get me wrong, but people need to, own up to their own custody. And it sucks because you got to think a little bit more. And consumers just want things to get done for them. And that's fine. We understand and we try to do that social market at least. But you can't, trust everyone will understand these things by principle and deliver that for you.
Yeah, it's sorry, allergies are killing me. But no, it's a really interesting thing to see out there. From Tether falling apart, possibly Bitcoin's rebounding. So on the bright side, Bitcoin's up. The real question, like we were talking about it earlier, is this a bear trap? Is the market going to fall again? Trump could, and don't want to get political on it, but
sure.
Trump could invade, Venezuela over the weekend. He closed airspace with a fucking tweet, little wave of a finger, just like airspace is closed. I didn't know somebody could do that. Only the president of the United States probably could attempt that. But
right.
If they invade or they attack or they, bomb, whatever they do, it would be interesting to see what happens because the market could scare and then Bitcoin could be the hold of value for those folks. Gold could skyrocket. It's going to be an interesting thing over the next couple of weeks into the end of the year to see what happens.
You know what's interesting? Larry Fink, I've mentioned this a few times in the past, but what's that?
I said fuck that guy at this point.
Well, so he actually owns about 13% of the world's GDP. I think it's 100 trillion in total. He owns 13 trillion with BlackRock. So he's the one who says the world as we know it, every financial asset that we know is going to be tokenized. And the reason for that is because maintenance costs are going to reduce. Transaction fees are also going to reduce. It's going to become 24/7 available because unlike stocks or, you got to wait for the stock market to open. With crypto, it's open 24/7. I could go on. Let's just kind of paint the picture. It's just overall better convenient for consumers and businesses.
It's all moving. Now,
absolutely.
I got one last thing, and it's kind of fun.
Sure.
We were talking about fucking wallets and stuff. I just wanted to show everybody, dude. I love this wallet. Like, I want to go buy this.
Ridge.
Yeah, I was kind of like,
cool.
Fuck. Great holiday gift for any crypto people. I love that. Yeah.
You see that? It has the Bitcoin logo right next to the ledger. If it's available, I would recommend it. It's like almost the same price as the Rich wallet that you're seeing. So, I mean, whatever you like. I wish this was sponsored. I would be raking in some money right now, but like,
I know.
We're not getting
for that holiday crypto lover. Go buy them the Ridge wallet. It's only $95.
See, that's fun though. I like the Bitcoin logo, but also my concern is if someone who might know better, if you're a more sophisticated thief, you might see the Bitcoin logo and they'd be like, "Ooh, this person has money. I'm gonna take it."
100%.
I don't know.
That's all I have, though.
You pick your battles.
Exactly. I just thought it was cool.
Yeah. So, I mean, that's cool, and thanks for sharing. So, I guess one more thing that I want to talk about here today is I was looking on Grok. Unlike you, I was not scrolling. I was doom scrolling on TikTok. I'll tell you that much. I had a little bit of free time this week, but I went on Grok and I wanted to get some things to talk about for today. And I was able to pull off some very unhinged comments that I kind of want to review with you. And this is kind of part of what I wanted to start doing here at the podcast. If you guys have stayed this long and if you want to watch that kind of stuff, let us know what you think. Just because I love the controversy on Twitter. I love when motherfuckers fight. Sometimes it's just entertaining, dude. So this is from Chairman, and we were kind of reviewing it earlier, whether we debated whether we should talk about it. So Chairman says commentary account, which I think it's interesting that X added that. It says, and this is what it reminded me when we were talking about like Coinbase and everything, central exchange stuff. It says, the longer you stay in crypto, the more you notice how weird this game really is. Some people get a huge following and start acting like they're untouchable. like the crowd is just a pool of liquidity. They can tap wherever they're bored. And they do it with a smile, like it's all part of the entertainment. So I guess it's referring to like the culture here on X or Twitter, like the whole crypto bro culture. And then he goes to say, what gets me isn't even the grifting anymore. It's how openly they clown the same people who trusted them, or they clown the people that trusted them. Regular guys who genuinely thought they were rolling with someone sharp until they get smoked and walk away feeling like idiots. Meanwhile, the influencers laugh and reset for the next wave. So it's kind of just talking about, if you couldn't understand that, TLDR, he's essentially saying there's a lot of con artists here on Twitter, or just anyone who you might follow in the space on crypto space in general. Like there's a lot of scam artists. They might seem smart at first, but then they end up finessing people, and influencers. There's just not enough like justice here. I mean, if you remember Kim Kardashian, she did the Ethereum Max in 2021 scam, and she made it a post on her Instagram, and she was like, not a post, but it was like on her story, and we never saw it again. It was like, oh hey, go check it out. You know, my advisors told me it's there, and people lost a shit ton of money, and there was no justice on her behalf, and now everyone is cherishing her, or just, you know, watching the Kim Kardashian show like nothing, and feeling bad that she didn't get her she didn't pass the bar because she started trying to become a lawyer recently. But it goes to say that, you know, it follows in the end. It's a messed up dynamic. The puppet masters joke. The crowd blames themselves, and the cycle keeps looping because no one wants to believe they were never on equal footing. I thought that was very interesting because, and the reason why I wanted to mention it is because you hear a lot of times conflicting opinions on crypto. You know, we have very strong opinions, like you and I are saying, hey, dude, we've been on this space for a while, and we really have. But based on what works, and we're just trying to do the right thing for ourselves, and if you want to join us along the way, we'd be happy to help you get the right thing done, right? Like, don't put your money on a central exchange. Like, do what we do. We put it on a cold wallet. But it also goes to show you, like, you should just be careful who you listen the advice to. If you feel skeptical about us, that's totally fine, which is kind of like meta, saying, like, trust us, but also watch out for people who, you know, give you advice. So never listen to influencers, especially who don't know shit about crypto. Like Kim Kardashian, like, I would not expect that from her at all or ever.
Yeah, because I went and looked at his other tweets. Like he says Trump's a puppet master, that
The same guy, Sherman.
one of them. Yeah. Like
is he the one that you told me?
I can't find anything, because there's a few chairmans out there. But this guy's Canadian.
Oh gosh.
So I'm kind of curious, like, you know.
Interesting.
Canadians' opinion on crypto, like, I wonder what it is as a general thing.
People are loud on Twitter, and you have to if you want to send out. So I will take it as a grain of salt, even, but also there is some truth in what he says. Like, some people just listen. Some people just talk about off their ass about like what the standard should be, or they just want to shout out their opinions. But oftentimes it's not good. People can be very dumb.
100%.
But this guy's not dumb. I think his thoughts were right on the point. Kim Kardashian Kim Kardashian talking about crypto, it was very dumb. They say that there's not as much brain activity in her head. I don't know if you saw that. Little side note.
No, I was just looking up this guy a little bit more. Sorry.
No.
I just saw too on Polymarket that some New Yorkers are getting $12,000 in crypto for a universal basic income experiment, sponsored by Coinbase.
Polymarket, some New Yorkers are getting $12,000 in crypto for a universal basic income experiment. Wow. Damn, what do I have to do to get in there? Dude, same. I'm gonna go to New York right now. If you're watching this on YouTube, or you can kind of read the stuff, but if you're on Spotify or watching audio, we're just scrolling through the feed and people are just being unhinged, which we love to see that. So, actually, why don't you go to YouTube if you're not watching this on YouTube? Like, this is where the vibes are at. You can always look at my 5 o'clock shadow, which is not very appealing.
I think we're good. Thanks for listening and thanks for joining us, and we'll see you next week.
Yeah, see you around, guys. Be safe.